Welcome. Thank you for joining. So you are in for week 4 webinar, the second webinar for week 4, Introduction to Financial Management. We had the first one, which was budgeting on Tuesday. Now we are going to be talking financial management. We still have our presenter with us, and she's looking forward to interacting with you all like on Tuesday. So in the meantime, please use the chat to introduce yourself and the country you're joining from. Hi, Stella. Hi, Roderick. Welcome. Hi, Caleb. Hi, Genesis. Okay, so we are going to start as we let more people join us while we've started. So in the meantime, let's kick off. So welcome again to today's webinar. Like I said earlier, it's the second webinar for week 4, Introduction to Financial Management. We had a very interactive webinar on Tuesday, and this is the second webinar for week 4. So if you are here for that webinar, you're in the right place. So I want to just encourage you all, those present, please use the Q&A or the chat to send in your questions while the session is going on. Our presenter would like to attend to them as she goes. So again, the pitch competition is coming up and the registration would be live very soon. The registration period is a very short period. So once the registration starts, please register to participate in the pitch. I want to introduce myself shortly before introducing our presenter. So my name is Success Eugene, and I'm the Leadership Skill and Development Coordinator for WMI. I will be moderating today's session. And we have our presenter with us who is going to be speaking on the topic Introduction to Financial Management. I'm also going to introduce her right now. So Prof. Kalunda is an Associate Professor of Finance at the United States International University, Africa. She's serving as the Acting Deputy Vice Chancellor of Finance and Operations. She's an ardent researcher with several publications in reputable journals. She's also the Vice Chair of the Institute of Certified Public Accountants of Kenya. Prof. Kalunda serves on a diverse range of boards, spanning private companies like Lofty Coban Investments Limited, professional organizations like the Kenya Accountants and Secretary National Examination Board, KASNEP, educational institutions like Kasarani Technical and Vocational Center, and 2 high schools. She holds a Bachelor of Education degree from Moi University, an MBA from the University of Nairobi, and a PhD from the University of Nairobi. She is a certified public mediator and a member of the Association of Women Accountants of Kenya. It's a pleasure to welcome Prof. Kalunda to today's session. We are excited to hear from you. And I think you can introduce yourself now. Welcome, ma'am. So while Prof. Kalunda is coming on, but she's with us already, but before she turns on her video and speaks to us, I also want to encourage you once again. Now we have a fuller room. Please use the Q&A to ask your questions. She's going to be sending to your questions as the webinar progresses. Thank you very much, Prof. Nice to see you today. You're welcome, ma'am.
And thank you so much, Success. Thank you so much, Alice. Thank you so much, participants, for joining. I can see we are 22 of us, and I'm hoping probably for more to come. I was going through the chat, and I can see we are from all over Africa. That is great. And I think the last time, for those of you who are here, I was saying you need to also try to just get to know each other so that we can even pick things from a country context. As much as we're in Africa, I'm sure we have a number of differences here and there. So I'm very delighted and honored to be having this session with you. I've heard that this is the second session you are having for this week. So as you have been introduced, my specialty is in finance and accounting. So I'm so happy that I'll be just taking you through something that I'm so passionate about, something that I live for. I mean, that I can say it's my bread and butter. And this is financial management. And whatever we'll be learning today will be quite actually, it's just at the introductory level, because when we look at financial management, when we look at how to manage your finances, this is something that is quite broad, and it is actually an area of specialization in accounting, and I mean in the wider accounting and finance area. So as I've said, this will just be an intro. So as a good teacher, we need to agree on what we need to have learned by the time we are done with today. And our learning objectives by the end of this 1 hour session is we should be able to understand what is financial management, what is its significance in a business. And if I recall the last session that I had with you on, must have been on Wednesday, it was, no, on Tuesday, it was about budgeting, which now is a subset of the things that you need in financial management. So we are also going to learn the key financial challenges that are unique to small businesses. And why we are focusing on small businesses, most of you here, I believe, probably none of you has a very big business. And when I talk about big, we normally measure big in terms of the number of employees you have, the amount of maybe revenue or profits that you are turning. So our businesses are small. We want to grow them to the next level. So it is important that at this point we learn what are the challenges that we encounter. And definitely when you know the challenges, you're in a position now to come up with solutions. And then finally, we should be able to comprehend fundamental financial principles and tools for managing finances effectively. So welcome to this session. And by the time we are done, please check and see whether you've been able to achieve that. So in terms of how I'm planning to deliver this content so that it's in granular, it is in small portions so that you can be able to understand. We'll start with the introduction, we'll go to financial management, financial planning, importance of expense control and cost management. And you can recall that in the last class that we had, we looked at the budget, which has basically the revenues and the expenses. But here we want to look at more details. How do you manage cost? How do you manage expenses? Because the less expenses you have without compromising quality, the more profit you're going to generate out of, if I say, a constant revenue. And then we're also going to look at financial records that are very critical for financial planning. And then finally, we wrap up with looking at the financial tools for managing finances effectively. So in my usual way of starting, I like bringing some just thought-provoking questions. So all of you, as I've said, are aspiring to have businesses. And I'm assuming based on the model that I got to learn the last time I had a session with you, you'll have a project in terms of, you'll need to come up with a project in terms of what business venture do you want to get in. So I want to put myself in your situation. So assume you are this lady here. So she's thinking about doing her business. So she has questions, because I remember this is something you don't know, you've not done it, but now you want to run it and it is yours. So if it succeeds, all the praises will be yours, all the money will be going to you. But if it goes down, then you have a lot to lose. So the lady is asking herself, if I open my own restaurant, how much money will I need? That's a very critical question. And I would want you, as we proceed, you can just chat. Now, in response to this question, where would you be having, how much money would you need? So maybe you can keep you can just give if you are the one, how would you know this? So I want responses on that. And then now, once you've come up with the figure, the question will be, how will you manage the finances? Remember, cash or money is the lifeblood of a business. So if you don't manage it well, it is just like if the blood in your body is not just going around this body well, you are going to have certain maybe critical conditions that will jeopardize your life. And then as you come up with the sources of how much, an idea of how much money you'll need, you are likely to see that you cannot have all the resources that you have. Money has always been scarce. So the question will be, do I need to borrow money? Maybe do I need to bring in more partners? Do I need to wait and save more? So those are the questions. What is the source of capital? And then the other one, how many employees will you need? You are planning to start a restaurant. You should do some market scanning so that you have an idea. Is it a small restaurant? Is it a restaurant that will be targeting maybe people who are working? So the busy times will be the lunch hours. Is it a restaurant that is that maybe for the people who are working in a construction site? So it means whenever there are constructions, that's when your business will be quite busy, and then it will be seasonal. And then now the other question, and this is the big question we always ask ourselves, will my expenses be more than my revenue? And that's a very important question, because if your expenses are more than your revenue, that means that the business is not going to be sustaining itself. The business is not profitable. So I had asked a question in terms of if I open my restaurant, how much money do I need? And I was expecting to get an answer. I've not seen any. So please chat. I just want to get what you are, the figures that you put. So think like you're the one who's starting that business, and give me answers, because I'll be asking questions from that. Are we together there? And this is just trying to confirm, are we together, all of us? Can I get yeses or thumbs up? And then I see responses. Yes, I can see one chat coming. Thank you, Femi, for confirming that we are together. Yes, now next, can I see how much money do you think you might need? Henry, you are there, you're in the other class. I can see names that are now familiar. So how much money would you need? Femi, Henry, if you are to start a business, how much money for a restaurant do you think you will need? And I would want that answer, because it's going to guide me in terms of how I'll be responding. Some other questions that I will write, I will throw from that. Henry? Good. Okay, Henry says he'll need $2,500. So that's quite an amount. So my question now would be, do you have that amount of money now? If yes, how are you going to manage that money? That's the first question. If you find you had less that amount, the question will be, so where do I get the balance? Okay. I can see Femi has a very big amount that she wants. That must be a big restaurant. And then now from that amount, it actually gives you the size, which now will tell you how many employees would you need. And then now we go to the crux of the business. So how will my revenues be? How will my expenses? Will they be able to, will my revenues be more than the expenses? So these are some of the questions that you need to answer, or financial management will help you to answer. Okay, so we can, okay, and I can see Ernest has a very modest amount here. So you can see all of you, you are starting the same business, but with different amounts. Now, before we proceed, I just want us to look at what we have, what I've projected. And there's a very interesting saying, which I want you to carry with you in whatever you do, whether it is in business, whether it is your work. This is a very important saying. It is Oprah Winfrey who had said this. And the saying is, the reason I've been able to be so financially successful is my focus has never, ever for 1 minute been money. Now, this is a very strong pointer that every successful business person has actually carried with them. So if I go back now to the previous slide, you can see how will my expenses be more than my revenues. Most people focus on this, where the business that you want to run, your intention is to make a profit, and you want to make it big, and you want to make it as fast as you can. So remember, for the kind of businesses that I would expect you to come up with, this should not be one-off business, one-hitter business, where you sell a product to a client and the product is expensive, but it is useless, and the customer will never come back to you. that such a business is not sustainable. So we want to come up with businesses where our focus is not on the money. That should be at the extreme back, but your focus should be you give the best product at a reasonable price that can ever be given. You are sorting out a need of a community. And therefore, it is actually the product that will sell itself because it is able to address the needs of the community or the target market. So with that introduction, before we just go now to the details of what financial management is all about, the next thing that we need to be very cautious about is what are the key financial challenges that are unique to small businesses and to startups? Because I've said that is where most of you will fall as you grow to bigger businesses. So unless for those of you who will be lucky to inherit businesses from your relatives, from your family, majority of us will start at the basics. You'll be the founder. So one of the key things is limited capital. Now, in the last class, we prepared a budget and we saw that the budget had a shortfall. And we came up with ideas on how to raise additional resources or additional money. Now, limited capital is almost a constant in any business. And the amount that of capital that is limited actually will guide you or will drive you to the mode that you can raise the amount. If you are a big company, you are going to raise more funds by selling shares. If you are a small company, you will get partners. Okay, if you are an individual who has some other assets, you can go and get the amount from the banks. So there are options on where you can get additional capital. So that means now, since capital is always limited, before you start your business, come up with a total of what is the capital need of my business. And once you do that, you can now look at, and remember you are doing this before you even start. You can now actually say, I'm short of this, and this is where I can actually go and get the resources. Now, the other problem or challenge that a business will have will be uncertain cash flows. Now, remember you are a small business. You are trying to penetrate a market. Now, one very key challenge that is very common is the fact that you'll find that you cannot project your cash flows with certainty. Okay, one, you are new. Second, the business is small. So there'll be seasons where you have a lot of capital, and there'll be seasons where you are likely to have less. So that is something you must be cognizant of. And at least by having that knowledge, you can be able to plan effectively in your business. The other problem or challenge, so let me not call it a problem, but a challenge. The other challenge that you might have is high operational cost. And that's why I said that we need to look at how do you manage your cost, because that's very important. And when we talk about management of expenses, this does not mean that you compromise quality. And I'll keep repeating that. The issue is that you can actually look at an innovative way to get good quality and still be able to offer the best. I mean, there are methods that you can use to get your goods at a cheaper cost, but still maintain the quality. And we are going to look at them. And then, and I was happy the other class when we were discussing of how do we manage this shortfall. Some of you came up with very good ideas. Can we get volunteer teachers? Can we tell the community to chip in? Can we get land from the community? So you really need to look at how to do that. Again, now for small businesses, there's always limited access to funding. Remember I said you can raise finances from by issue of shares, by getting partners. It's not easy to get all this. For you to even sell shares, you must be a listed company. So for a small business, we are completely out of there. The other one is getting partners. Where will you get this person who trusts you, who is ready and is having a vision that is similar to yours? So that might actually limit you. If you have some cash, some assets, if you go to the bank, probably the bank will say, no, when we assess your credit standing, you cannot afford much. So we are giving you maybe 30% of what you wanted. So you can see that now will also be a problem. There's also an issue of market volatility for small businesses. Very small shocks in the market affect your business. Like, for example, I'd given you an example. I want to start a restaurant, and this restaurant will be catering for the people who are having constructions. Now, if something happens in the housing market, there'll be no construction. So your business will be affected, not because of your business, but it is reacting to some shocks in the market. And then, a very key problem, when you are a small business or a startup, attracting talent is a problem. In fact, most of the small businesses, and this is something that you should always know, when you start a business, when you get one, you cannot be able to pay them as good as the bigger firms. So you'll find that the only people you will be attracting will be probably the people who are new in the career, guys who are living, just finished college, guys maybe who don't have very good qualifications. So these people will be coming to your farm. You'll go through the pain of training them. And once they get the training and the experience, they will leave you. So you need to be very cognizant of that. You shouldn't take that personally, but that is something that you should always know. You'll be the training ground for the farms that are bigger than you. And then finally, lack of business history. So when you want to maybe negotiate contracts, people will be asking you, can we get a history of your business? Honestly, you have no history because you are small. So those are some of the key things that you need to be cognizant of, so that as you start off your businesses and you want to manage your finances, you should know that this is likely to bedevil your business. But the beauty is that there are ways of actually, through planning, to handle these challenges. So now we come now to the area of financial management, and this is now what will help us manage these challenges. So when we talk about financial management or finance management, we can say that managing the finances is the heart and soul of a startup journey. So before you start your business, this is the heart and soul. Without the heart, without the soul, you cannot live. So knowing how to manage your limited finances, these unpredictable finances, is very key to the success of your business. Now, with the knowledge in financial management, you are going to be able to lay a strong foundation and ensure that your business has a sustained growth. Meaning that if you don't have key knowledge on financial management, your business will be a business which tomorrow you cannot tell whether it will be there. But with proper financial management, you can actually be able to say, I'll be there next year, I'll be there the year after this, and my business is growing as we move on. Now, why businesses fail is that they do not manage their finances properly. And that's why this knowledge is very important. Now, for you to be able to manage your your finances well, you will require a financial plan. And when we come now to financial management, the plans will be more. You remember the last class we were just talking about budgets, but now you need to look at it from a very broad perspective. So, from a definition point, yeah, thank you, Karima, for actually emphasizing the importance of financial management. So from a definition point, so that now we are all clear on what financial management is, this is a process, meaning it is not an activity. It is a process. It takes time. It is continuous. So this is a process of planning, organizing, directing, and controlling an organization's financial resources to achieve its objective. So financial management is aimed towards achieving a particular objective. So for you to achieve that objective, you must be able to plan, you must be able to organize, you must be able to direct, and you must be able to control the financial resources. So what are these goals of a firm? And what I would want to say here is that when you start your business, you should actually ask yourself, why are you in this business? And remember, for you to start a business, is you are actually sacrificing, where you bring in your resources, put it in a venture, and in that venture, you have certain goals, you have certain expectations. So which goals are these? Now, the first goal for a business, the first objective of a business is to maximize shareholder value. Who is a shareholder? The shareholder is an owner. So the owner can either be an individual. Now, if you are alone, you as the owner, you are the shareholder. If it is a company that shares are traded in the stock market, the different shareholders are the owners. If you are a partnership, the partners are the shareholders. Now, the goal of a firm is to maximize the value of the shareholder. Now, what does that mean? That means that since you committed resources to start the business, your intention should be to increase the value of that shilling. And to maximize means I put in 1 shilling in this business. I put in $1 in this business. I'm expecting at the end of the year to have it increase in value. And the increase should not just be any increase. It should be the maximum that can ever be through proper financial management. So if I start a business today, I put in a dollar. After 1 year, my dollar value is still $1. Actually, I've lost value because a dollar today has a lower value than the same dollar in a year. So that should be you should be very cognizant. As you look at your business, don't just say I put in $20 or $2,000. At the end of the year, it is still that. You have actually lost value. So you need to have a goal of saying, I want to see growth. That is what we refer to as maximization of shareholders' value. Another goal of the firm is to ensure financial stability. When you start your firm, your objective should be to be here tomorrow, to be there the next year, and you are going to be this through ensuring that the finances that are in that business, they're actually able to run the business without you pumping in more funds unless you are trying to grow the business. Another one is to optimize profitability. Now, you can see what I've said, optimize, not maximize. There's a difference between maximizing profitability and optimizing profitability. Here we are saying we'll get the difference between the revenues and the expenses will be, ideally they should be as wide as possible, because the more revenue you have compared to the expenses, the more profit. But that should not be your goal. Your goal should be to get the maximum. The spread between the two should be optimal, meaning it should not be so minimal and it should not be so high, because if it is so high, you are definitely exploiting your clients. If it is so low, then the financial stability of your firm is going to be at a threat. So that one, again, it hinges on proper pricing strategies. You must have a good pricing strategy so that you don't want to exploit, and neither do you want to run in a situation where you'll be actually giving more than what you got to give that product or service. And then finally, which is very key, efficient resource allocation. So those should be the goals of the firm. And if you look at them, any business that you start, definitely it must have these goals. Otherwise, if you don't have these goals, the chances of that business surviving, or the chances of you driving directions toward success of the business, will actually not be possible. So those are the definitions. So if you have any questions, as we had said at the beginning, you are free to chat them. If you have any comments, you are free to just give the comments as we proceed. So when you start your business, you need to allocate your initial capital wisely. Remember, if you don't do that wisely, the business might perform badly, and then you get discouraged, and then you stop operating in that business. So very important is that you should be able to ensure that you allocate the resources well. Another thing that you need to note is that through proper financial management, your capital, okay, is going to be well allocated to the various needs of the business. Remember, one of the, if I can just scroll back, one of the question is, how will I manage the finances? Now, the issue of capital allocation will be very important. Are you going to buy the equipment? Are you going to buy, how will you buy inventory? Where will you get them? How will you meet your operating cost? How, for your business to grow, you need to do marketing. Another thing is that if you don't allocate your resources effectively, you are probably going to overspend on some items, okay? And this definitely will jeopardize the ability of your business to grow. So these are things you need to plan. And all these things are done beforehand. You don't do them as the business is running. You plan, and then when you start the business, you'll just be applying and amending where need be. So now that we have a clear idea is that, okay, sorry, I'd skipped one page here. Now that we have an idea of what financial management is, and certain finer details of how it helps the business, let us also recognize the importance of cash flow. So cash flow refers to the day-to-day money or cash that moves in and out of the business. So if you're in a business, cash will always be flowing in and out. So when you sell, cash comes in. When you buy the goods, cash goes out. When you pay salaries, cash goes out. When you buy equipment, cash goes out. So there'll be instances or situations where there's cash coming in and cash going out. So the way you manage that cash flow so that you always have enough to run the business is very important. Because you can imagine if you are selling, remember I said that sales will result to cash inflow. But if you are selling a lot on credit, it means that the amount of cash that will be coming in because your sales are on credit is less. So that might mean that at some point you'll be short of cash, and cash is the lifeblood of a business. So you need to know how to plan. So if you are selling on credit, what are your credit terms? If you are selling on cash, that will be very good for you. But you will also know that some clients who will get credit elsewhere, they will leave your business. Again, if you are selling goods on credit, you need to plan on that gap, that period between the credit days and the cash and the sale and the credit day. Let's say you are selling for a credit of 30 days. You need to know within those 30 days, before I get the cash, where will I get the cash to run the business? So management of the cash flow will be very important, because if you are not able to look at that before it happens and plan, then you'll be in situations where the end of the month has come, you cannot pay your employees. When it is the normal utilities that are paid on a monthly or weekly basis, you cannot do it. And this will definitely affect the profitability of the business. And even the suppliers will not be able to pay your suppliers. Therefore, it is important to ensure that you manage your cash flows. Normally when we prepare a cash flow statement, it has to be broken down into periods so that you know January, I'll be getting this. Actually, you can do with a cash budget where you know January, this is what I'll get. This is what I'm expecting to get. These are the expenses I'm expecting to pay. And I can see February, I'll be having a shortfall. So now that I'm planning now in December for next year, I'll know that I should now start in December trying to negotiate for credit for February. Otherwise, if you wait until February, you'll be in a lot of trouble. So we are saying that by effectively managing your cash flow, you'll always be having enough during the months that have less, and also you'll be able to have enough and not excess cash, so that the periods that you have excess cash, you know that that is the period for investing. So it's very important to manage your cash flow. So as part of financial management, cash flow management is very important. Another very critical thing is the issue of expense control and cost management. Now, when we talk about expense controls, remember a business is basically about revenues and expenses. And the gap between the two is what determines the profitability, is what finally determines the value that you're giving the shareholders. So normally we say that the gap between the two should be wide. The smaller the gap, the more your profits are so limited that any shocks, any uncertainties that come that are negative will throw you to the loss side. So what is expense and control management all about? So we are saying understanding the significance of controlling expenses is important for the long-term success. And you can only do this well by putting it down in writing. So again, a repetition, it is not only about making more money, but also keeping more of what you earn. Now, this means that in business, when you make profit, then it is important for you to know how you will invest what you have earned that is over what you had spent. So it is not just about making money, but a plan on how that money you'll do it. And again, I also said, when it comes to making the money, your intention should not be profits. A business will always have money in, money out. I mean, it's transacted through money, but the profit should not be your main goal. So now that we've understood the relationship between expense management, about expenses, we want to look at how can we control that. And before I go to the other part of the slide, there's a question that has come that says, okay, there's a comment. One problem of establishing a business as a startup is the fear of failure. What technique can be applied to overcome this obstacle to optimize profitability of my investment? Yes, and I like that fear, because if you start a business without having that fear, remember this is a risky venture. So if you start a business so optimistically, without looking at certain signs, without doing certain research, then your business might be doomed for failure. So it is good to have that fear, and that fear now should drive you to ensure that you have actually now done the planning that we are talking about. So that, for me, that will be very important. Planning, doing market scanning, coming up with a budget, coming up now with what we have put here. Okay. Now so that question had come in the Q&A. I don't know whether you can see them, but I've seen that. So I'm hoping I've answered it exhaustively. So why do we need to control our expenses? And I think I was hinting some of these things when I was explaining that side. So one, the difference between the expenses and the revenues is what affects the profit. So the more the gap, the more the profitability. Now, if you have more profit, if you are controlling your expenses, your business will be stable. And I want to just give you a very simple example of what happens in any business. If a business sees that there are certain maybe challenges in the market, and they might not be able to make as much revenue as they had expected, what the businesses normally do is that they start reducing their expenses. Now, one way of reducing expenses is having layoffs. I'm sure you've had such situation where your friend was working and then they tell you, oh, I've now been laid off. Have you heard of such situations? And maybe I'm sure you've heard about that. So I'd also want you to chat in on other ways through which you can actually control the business, as we look at the importance of controlling expenses. So I want you to come up with more ways of how we can control expenses, not business, so that I can just see what ideas you have. So I've said one way is to downsize the business. And whenever you hear the word downsizing, it means we are reducing on the number of staff. So please let me hear more ways on how a business can control the expenses. And now, another importance of controlling expenses as I wait for your solutions is competitive advantage. Now, if you are going to control your expenses to a level that your expenses are less than your competitors, then you will always be at an advantage, because it means you can actually decide to even give discounts for your products. And if your competitors give discounts, they'll be actually running the risk of selling at a loss. But for you, because you are able to control your expenses, you'll not feel the pinch of the discounts. Another, from a competitive advantage also, is that if you're able to control your expenses way much better than your competitors, you'll also be able to have time to even spend some extra amount now on marketing, so that more people know your business. So long as you are having expenses control, if you when in a better way compared with your competitors, you will always be at an advantage. Again, controlled expenses, they ensure long-term success. They ensure you can mitigate risks when they come. When you are looking for investors to expand your business, then you are likely to get more investors who are interested in joining you, because they know you know how to manage finances. And again, it will lead to improved cash flows. So I want to take a pause there and wait for your answers on how can a business control its expenses. So I'm waiting for you to give me the answers. Here we were why, now me I want to how. How do we control? So I'll give you a minute and then we can proceed. So I'm hoping we are all good. Okay, Anne, I'm waiting for how to manage expenses. Thanks for confirming you are good. But let me hear some responses on how we can control expenses. Wow, the minute is almost over and I get no response. So okay, good. So I can see Caleb has posted something. Then Caleb. So Caleb says, for service providers, we can go virtual to avoid physical office good. So you can see, instead of paying for office rent, you can actually decide to do your business in your house. But then now you have the virtual space. And then Stella says, I suggest that by reducing the number of employees, yes, thank you. 2 more, and then we can proceed. 2 more responses. Ernest, are we here? Did you get the question right? I asked, how can we reduce expenses? And I have only 2 responses from Caleb and Stella. I'm waiting for 3 more responses. So please let's type in, and that gives me a confirmation that we are together and we are following. Okay, thank you, Anne. Anne, you said that we can use alternative energy sources like solar instead of paying electricity. Thank you. And then we can even, if we don't have solar, we can go for energy saving bulbs. Thank you for that. Anthony, Femi, where are we here? I'm still waiting for 2 more. Thank you. Now they have come. Yeah, others monitor financial metrics, reduce labor and travel costs. So basically what I'll say there, we do the monitoring, and besides that, we cut off all the unnecessary expenses. And then again from Caleb, thank you. We can recycle some materials instead of buying new ones. We can advertise the business on social media where it is free instead of publishing. So thank you. You've given me the confirmation that we are all together. So we can proceed. So these are some of the examples so you can see. So I'm going to emphasize on a few maybe that were not mentioned. One, we must budget, that we talked about it. I want to go to vendor negotiation. Now, one way of cutting down on expenses is that when you get into a contract with a supplier, who now we are calling vendor, try to negotiate for the best deal in terms of when you need to pay, in terms of even the cost. Go through that contract, go through the services they are offering, and ensure that you only deal with what is necessary and you get it at the best price. So always learn to negotiate. Another one is inventory management. So here it means you need to control and monitor and come up with a formula or a model of how you are going to manage your inventory. So the aim here is one, to avoid stock out and to avoid having excess stock. The aim again here is to ensure that when you are ordering the optimal quantity so that you don't keep buying the same thing like every day. Okay, and also so that you don't have so much in the store that it is holding the money for the business, and it can also run the risk of becoming obsolete and even being stolen. Okay, we talked about lean operations, that was good, digital marketing, employee training, and also customer feedback. Now, this is very important because you remember whatever services you're offering, whatever goods you're selling, they are not yours, they're for the customers. So whatever they tell you about the business is very critical. So we can now go to the records that will help you in financial planning. So most of these records, we refer to them as financial records. They are of different types, but they serve certain purposes. So one, these records will enable you to show the financial performance of the business, and the key ones are you can have maybe a cash book, you can have the profit and loss account, you can have different ledger accounts for the assets and for the activities happening in the business. So we are told that these financial records actually record the day-to-day transactions of the business. And this is very important for monitoring. Okay, so once you have collected all this information, at the end of a period, you now need to separate the incomes and the expenses and then get the difference between the two and know whether the business has been making a profit or a loss. So for small businesses, I will encourage you to be doing your profit and loss accounts frequently. For big businesses, we wait until the end of the year, but for some businesses, they do it quarterly, half yearly, but you must have a frequency. But for a small business, you need to do it frequently so that you can be able to monitor if there are any problems, you correct them. Now, these financial records that you maintain that help you in so many ways, they will also help you when you want to borrow, because the banker or the lender will tell you, I want to have an idea of how you are performing as a business. So you can only prove this by giving these records that you have. And that's what I've written down there. And then I've talked about the accounting period, but I've said for small businesses, can it be frequently? So these records will help you to track money that is coming in and out. They'll provide a system for recording, classifying, summarizing, and interpreting financial data. Now, if you look at this, if you look at this image, you can see there are so many records. You'll have records for the personnel. You'll have records that you are dealing with banks. You'll have records for the property, the taxes, all these. But after you've taken all this information, you will need to prepare now like the financial statements. And besides just preparing the profit and loss account, you will also, which we are going to look at and see how it looks like, you will also need to prepare a statement that shows the assets and the liabilities that you have. Okay. I've seen yes, I'd seen that question from the engineer, and I had responded, but I can still do that again. Thanks, success. So we were talking about these financial records. Very important. You cannot know how a business is running if you have no records. So what are these financial records? So any business will have assets. So assets are resources that the business owns, and the business has control of those assets. The very first asset that the business will have will be the cash. This will be either the cash in the bank or the cash at hand, because for you to start business, you must first have cash. Another asset that the business will have will be now assets like furniture or any other assets. Remember, for you to start the business, you will need some premise. Let's say if you are not working in a virtual space. So the tables, the seats, the motor vehicles, the drawers, that is asset. You must have a record. And the record must tell you what is the cost, how many you have of those items. And as your business advances, you should be able to know how much value is getting lost in that asset because of using it. Because if it loses value of 20%, it means in 5 years, it will be of no useful, it will not be of any usefulness to the business. So you need this record so that you can know this seat, we bought it 3 years ago. Okay, you will need inventory. Inventory is very key because this is what now you'll be using to trade. So you must have inventory, and the inventory will be of whatever nature, depending on the business that you are in. And then the other one you can see, it is a building. And this looks like the building for our restaurant. Now, so this is about assets. So you must know them and you must know their value. And you must find a way of knowing how long are you going to stay with them. Now, the other thing that you must have is a record of the liabilities. Liabilities refers to, remember I said assets, these are resources that you own and you control. Now, liabilities now, these are resources that were given to you by outsiders and they need to be paid. Okay, so these liabilities, you can see like a credit purchases, you have to pay for them. If you have any unpaid bills, remember bills will always remain unpaid because like for example, electricity, you consume first and then you get the bill. If it is water, you use and then you get. So there'll be bills that will be coming which you now need to pay. Those are liabilities until the moment you have paid them. You'll also borrow some money. The cash can be to run the business. It can be in form of an overdraft. It can be in form of a short-term loan. It can be taxes due. Remember, you pay taxes after a certain period after you've done some trading. So those are liabilities. And then now in this other quarter here, we have now what the owner put in the business. You must have a record of that. And this is normally, like for example, the capital contribution, this is the amount that you put in to start the business. And you'll find that if you had nothing in the business at the start, this amount is exactly the same as the cash because you get the capital and then the capital will come in form of cash at hand or at bank. But then now as the business grows, the profits that you'll be getting, and these are the ones now, when we combine these two, they lead now to the shareholder value. Now, all the profits that you make, they'll be added to what belongs to the owner. And that's what we refer to as owner's equity. Now, a business that is maximizing the wealth of the shareholder, every year the owner's equity will be growing. Because you can see the capital, if you don't inject new capital, what will make this side grow is the accumulated profit. So every year you add the profit down. If you have losses will reduce the owner's capital. And that now will mean that the shareholders' value has been maximized. So basically, these are the records that you need because from these records, you are able to know how the business is performing. Now, if you look at this, the way this information has been presented, we can actually say that all assets that the business have been financed by liabilities and the owners. And this actually gives us an equation that is very important. We actually call it the balance sheet equation or the bookkeeping equation that says that assets is equals to liabilities and capital. And you can actually see if this was a cake, you can see the top half represents assets. And then below, what is supporting this asset? It is what you have borrowed and you need to pay, plus what you have contributed as the owners. So assets is equals to liabilities plus capital or owner's equity. So for you to know that the business is growing, that information is important and this must be recorded. And with this information, now you can make very good decisions that are well informed about the business. So I've talked about this in terms of the assets from that diagram. And then when you're trying to purchase, you can decide, are you buying on credit, cash, and all this. But the bottom line here is that businesses must be careful to make wise decisions between needs and wants. So only prioritize on what is needed. So I'd explained this about liabilities, about capital, and then this is a simple balance sheet. This is actually a diagrammatic picture of a balance sheet. So when you record it in your books, you'll not be having these pictures, but it will look like this. So you can see we have assets, which are long-term, and then current, and then the total assets. And then we have these assets have been supported by liabilities and equity. So these are liabilities, and then at the bottom it is equity, which is the same as the capital and the retained earnings. So you can see it must balance. The assets which have a value of 120 must be supported by liabilities and equity that has a similar value. Now, if the business is growing, these retained earnings will keep increasing because there's profitability. So this value will continue growing. And we are going to say that the wealth of the shareholder has grown. And this will be reflected by either new assets or more cash in the business. Now, the other statement that is very important, remember we were talking about the gap between the revenues and the expenses. Now, that information is consolidated in a financial record that is called the income statement or the profit and loss account. So this is a statement that is just prepared at a financial period to just show how much came in, how much was spent, and therefore what is the profit. Now, that profit here is the one that we refer to as the retained earnings. Now, that profit from this diagram is what was referred to as accumulated profit. So those are terminologies in accounting. So you can clearly see the more the revenues are compared to the expenses, the higher the profit. But we've said that our goal should never be this. Let us give the best services. Let us offer the best goods, and our revenues will grow up because we'll have more customers. And when you have more customers or clients, your cost of operation, the cost of goods will be low because you'll be operating at a large scale. So you'll be enjoying economies of scale. When your business grows, because you are making more profits, you'll be able to get more skilled workers. Remember, we talked about gaps in talent acquisition. So if you are doing well, now you'll be able to have good employees, and the better employees you have, the more you can actually plan about how to reduce expenses, and the better your business will be growing. So you can see all these things are related, and that's why the skills and the conversation around financial management is very important. So as we almost go to an end, what are these very important tools that we need so that we can be able to have all these records that we have been talking about? Now, for any business, you must have a way of getting those financial reports. How do you do that? You'll get them through accounting softwares. Now, these accounting softwares, there are some that are gotten free, others you buy and then you install and then you pay them licenses on an annual basis, but you must have an accounting software. So at your free time, just Google and see the accounting softwares that are there, maybe for free, they will help you. You'll also need very critically budgeting tools. This is the one that will, remember, a budget is just a plan on how resources will be used and on managing resources. So there are so many budgeting tools that are there. You can even generate yours just going to Excel. You can go to Google Sheets. We have cash flow forecasting. Remember, we said you must know when cash will be in the business, how much it will be there, how much you will be having in excess, and also how much will be in deficit, so that you plan on its use. So you can have cash flow forecasting tools, they are there. Another very important one is invoice management. Now, for you to be able to put proper records, to know how much you have sold, to know how much you have sold on credit, and when this should be paid, you must come up with an invoice management system. So again, you can get this one for free, or you can get a system that has actually all these in one system. Like if you have an ERP system, it will have actually all these modules in one system. Again, you need to have an expense tracker. This one will ensure that things, whatever you are capturing, is accurate and you can be able to monitor. We've talked a lot about expense control, so they'll help you on that. And then the next one is financial planning softwares. So after all this, now you need to now be strategic. and know how can you project about where resources you can get, how you allocate resources, how much you can give back to the owners, how much you can reinvest. So all this will be very important. So these are very important softwares. So before we go to an end, if you still have any questions, you can ask. But as we try to maybe internalize, I would want us to just think about this small question that is here, and then you can try. If we don't get time to finish the answers, because I'm seeing maybe time is not so much on our side, I can still be able to give you the answer. So today I will still ask somebody to read. So Success, please help me get someone who can read. So let me request someone to read so that I can also learn and hear your voices. So who is going to read for us? Success, please check on that and then allow them to speak. I've muted myself, so Success is
Okay.
going to read
Yeah,
for us.
I'm looking out for who would raise their hands, and then I will let them speak. Anyone can volunteer to read. Just use the raise hand option and you'll be allowed to talk. Okay, Caleb.
Okay, thank you. Hilary, please proceed.
Okay. Thank you. So the case study is about the community garden project. A small nonprofit organization, Community Green, aims to promote sustainable living and community development in a local area. The organization has received a grant to establish a community garden on a vacant piece of land. The garden will provide fresh produce to local residents, create jobs, and foster community engagement. And here are the questions. The first one is, how can Community Green maximize the impact of the grant funds? Number two, what are the potential benefits and drawbacks of investing in a greenhouse? Number three, how can the organization ensure the sustainability of the community garden project? And finally, what financial metrics can be used to evaluate the project's success?
Okay, thank you so much, Caleb, for reading for us. So yeah, so this is just a simple example, and I took it from the example, from the context of non-profit organization. So this is an organization that's called Green Community. They have a goal which is to promote sustainable living and community development, and they have received a grant, and the purpose of the grant is to establish a community garden on a vacant piece of land. So they have projected that the garden will provide fresh produce to the local residents. Besides that, it will create jobs, and it is also going to foster community engagement. So for you as somebody who has gone through basics of financial management, the first question will be, so how can this green community maximize the impact of the grant? So I will share the answers that I had. So I can stop sharing this, and then I come up with a new share. This. Yes, so okay, let me try and expand this so that it is. Yeah, so these are just examples, but they are not exhaustive. What are you seeing? Are you seeing the slide, or are you seeing the PowerPoint? I mean the Word document or the PowerPoint? Good. Okay, on my side it has shifted. Okay, fine. So if you look at what we have there, let me. Sorry. Okay, sorry, I'm trying to get out of, okay, let me stop sharing. My screen, I'm seeing something different, huh? So I stopped the screen. Okay, I'm at full screen, so I can now share. Yeah, so I'm trying to reshare it again because I was not seeing it on my end. Okay, good. Yeah, so you can see for the question here was how can we, the first question was how can the community maximize the impact? Remember, this is an NGO, and we are looking at the impact of the grant. So we actually asking, how can we manage the funds so that we get the best return out of it? We can get the maximum value from a grantor point of view. So one, what we need to do is that we can engage the community. Remember, this project is meant to assist the community. So we can try to ensure that we bring in community in the project. Let us involve them so that we have buy-in. Let us try and see whether they can volunteer. You see, now if they start volunteering, that means that our expenses will be less. So we are at the expense control. Now, in most cases, we find that the funds are not enough. So we can even bring in more partnerships so that we can ensure there's broad participation. And even in terms of the finances, the partners can come with other resources. And then prioritize educational initiatives. Now, remember this project, if we look at it here, look at look at the agenda. The garden will provide fresh produce to local residents, create jobs, and foster community engagement. Now, the second bullet is talking about prioritize educational incentives or initiatives. Offer workshop, classes, and school partnership to promote sustainable living practices and gardening skills. So you can see, as we give jobs, as we train the people in that community, we are able to run that project, we are able to give skills to them, and we are able to actually become better together. And then next, we've said here what we can do. We can also generate economic benefits. Remember, we are creating jobs. We can establish a community-supported agriculture program, explore value added. Remember, we are just selling greens. We can say, why can't we think big and try to do value addition? Now, the other thing I would want to even mention here about the creating of jobs, since this is a community project, when you are creating the jobs, you can now decide who in the community are the most vulnerable. Who in the community, if we give them the jobs, the impact will be greater in a family, from a family or a unit perspective. So you can say, we'll focus with the youth so that maybe they don't get engaged in other social vices. And they can even get the money and go to school or do certain things. We can decide then we are also going to give priority to women, because women, most of the time, the money that they get, women think about the family. And I'm not saying anything, I don't want to degrade the men, but the women are more committed. And that's why sometimes we say, educate a woman and you educate the world. So when a woman gets the money, they will not say, let me go and buy, let me go and maybe have a few drinks with my friend to just reward myself. They'll say, let me go and buy clothes for my kids. Let me go and buy food. So you can say, I'm going to engage the girls more. The women more. Again, you can look at that community. What kind of that community is that in terms of the social problems that they have? Maybe it is a community that seems to have so many girls who have dropped out of school, and maybe that community does not see girls' education as something important, and therefore the girls don't go to school, and there are so many cases of early marriages or maybe teenage pregnancies. You can say, let me try to develop these girls and engage them more. So you can see that way, even you can in future get more grant owners or grant funders who are seeing that you are doing something of value, and therefore they are going to bring in more funding. And then finally there, you can ensure sustainability. So those are some of the things that I would want to mention. You can look at the rest. And then in terms of the benefits, we all know the benefits of a greenhouse, but I want to look at what would be the drawbacks. What would be, okay, now for the drawbacks, now one, when you are having a greenhouse, you might end up finding that the cost of starting it, the cost of maybe people might start questioning about the quality of the food and all that. But you need to really look at what are the disadvantages. One, constructing that greenhouse will be expensive. Maintaining that greenhouse will be expensive. Another issue will be you will need specialists who know how to run a greenhouse. A greenhouse is not like just any other, the normal farming. And you can imagine this is a community where probably this is not known. So you will require some skilled workers who may be able to understand. And remember, we are cutting down on cost. A greenhouse will need maybe some power to maybe do the watering and all that. So those are some of the costs that might be there, might be quite high, which you must be cognizant of before you start the business. But all in all, you must ensure that it is actually a sustainable project. Okay, so basically those are some of the answers I wanted you to look at. And then now there was this question of what financial metrics. Now, right now we've talked about we looked at the financial records. Now, the financial metrics that you can use to evaluate the project is one of the metrics is called return on investment, ROI, return on investment. How much grant did you have? $1 million. How much is coming back from that million? If you get 2 million out of it, the ROI will be 2, meaning you put 1 and you got 2. Okay, so in short, you can say that's 100%, but when you do the formula, it will just be how much did you put in, how much did you get? So you can see it will be 2 over 1. Okay, now another metric that you can have to evaluate your performance would be to now to come up with the income statements. The income statements now will tell you these are the assets that you had at the beginning. These are now this is the value of the farm now. That is now going to be generated coming from the balance sheet. So you'll put in all the assets that you had, you look at the sales, you look at maybe the expenses that you have, and then you see how much cash do I have at the end of the period, how much, what is the value of this greenhouse, what tools do I have, what inventory do I have. So that will help you to understand the value of the business. So I can stop sharing that and go back to the slide, and we are just winding up now. Okay, so we were at this question. So when I was talking about an income statement, this is what you need to generate. You'll also need to generate this to show what assets do you have, what liabilities, and for you, your capital will be that grant that you received. So yeah, so now in summary, if we had time, I would have told you to chat in what you have learned, your take homes as a summary, but I want to just give you a wrap up, which in a way summarizes. One is that financial management is a critical function for any organization, for any business, for any individual. And we've learned what financial management is. We've seen the challenges that a business will have if they don't. We've actually seen most of the problems are around financial management. So having knowledge of financial is very essential. Again, we've seen that businesses will have goals and financial management will enable them achieve these goals. And by achieving these goals, they'll be able to have the long-term sustainability of the business. Again, the next thing is that when you are able to understand financial management in totality, and you use appropriate tools to help you get information that you want, that is accurate, that is timely, that is comprehensive, you can now be able to make informed decisions and optimize the financial performance of the business. So as I wrap up, I would just want to share this quote which has a very beautiful picture for those of you who like traveling and just enjoying the wonders of the world through just such vessels. We normally say that if you fail to manage your finances, okay, this is the same as somebody who is sailing a ship. This ship has no rudder, and therefore the driver does not control where it's going, it just goes. So you drift wherever the current take you. And if that is the case, you'll always end up on the rocky shores because you cannot avoid anything. You are just drifting and moving with the tides. So let our businesses not be such businesses. Let us plan, let us manage our finances so that we don't end up on the rocky shores, but we land safely at the safe docks. Yeah, so thank you so much for listening to me. Yeah, so that is it. So if you have any questions that you need, you can ask. There's the question that had been asked by Henry, and I mentioned that where we were talking about businesses trying to start up and then people fear because of failure. But I said, if you apply these skills where you plan before, you do market research before, you have a business plan, it becomes easy for you to be able to just see, have a picture of how the business is likely to be, the problems that you are going to meet, and how you can address them. So again, to ensure that the fear is not so much when you are planning for a business, don't be over optimistic, especially on the revenues, because that's where people go wrong. Because people come and tell you, wow, there's this business, it's so good. And then they tell you how you are going to make so much. And then you just go into the business and then discover all these were just castles that you are building in the air. So with that, I've not seen any questions, so let me take it back to Success, and thank you for listening.
Thank you so much, Prof. Kalunda, for that wonderful and engaging presentation. Thank you, everyone, for being here as well and engaging our speaker, Prof. Kalunda. She's really passionate about finances, and so far she has really taught us about budgeting and financial management. We really appreciate you, ma'am. So in the absence of questions, I would say thank you for attending. Thank you for those last words as well, Prof. Kalunda. Those were very inspiring as well. So thank you very much. And next week, we have two webinars. We have the HR webinar, which is for Tuesday and Thursday. So I would be glad to see all of you next week. In the meantime, Prof. Kalunda, if you have any last words before we just call it a day.
Okay, thank you so much, Success. Thank you so much, participants, for listening. So my parting shots will be always plan. If you don't plan, you are actually setting yourself to fail. And we've given you very good tips in terms of how to plan around your finances, how to come up with a budget. We've also come up on now the finer details on how to manage your finances from a broader perspective. So always plan. And for me, I would say that that Success has my contacts. In case you feel you need any consultation, I will always create time for you so that you can be as successful as you can ever be. But make sure that whatever information we've received here throughout all the programs that you're having, you apply that information because it is meant for a purpose. It's meant to make you a better person than you are. So as you go through your studies, I wish you all the best. But I try to be thinking big as a job creator because currently we don't have jobs in Kenya, and I'm sure in all other countries we don't have. So think about yourself as the creator of these jobs, and we are empowering you with these skills. And I really thank the Wells Mountain team for the beautiful things that they are doing. And I just want to say that since I teach at FSIU Africa, we have some of your scholars here. Thank you for bringing them here. They are very bright students, very curious to learn. So keep up the good job. And those of them who are around, they can always come and visit me. I would be happy to know them, because I normally, from the finance side, I see these are the students we are sponsoring. Thank you, and back to you, Success.
Thank you very much, Prof. Kalunda. And you can see the participants are also appreciating you in the chat. So I've sent your email as well, so anyone can reach out to you. Thank you all for joining, and until next week, bye-bye.
Okay, bye, and have a lovely evening, all of you. Bye.